Okay, so welcome to the Advanced Finance Strategies part of the presentation. I encourage you to take a lot of notes. I'm going to go through a lot of concepts, so I encourage you to put on your thinking caps and grab your pens and paper. There's going to be stuff that I'm going to cover. Sorry? Okay. Well, men can't, women can, because they can multitask, right? So I'm going to go through a lot of different concepts, and with finance on the scale 1 to 10, I'll probably cover like a 2 and a 3. Now, I'm doing a lot of advanced finance workshops as well. I'm running them in Brisbane and a lot in Australia as well, because finance is quite a complex topic, and it does involve a lot of different concepts. So essentially what I'll be doing today is give you a very basic introduction into finance and really set the foundations that you can build upon. Also, a lot of the concepts that I'll be covering towards the end will be a little bit advanced in terms of structuring property portfolios. There'll be a couple of products that I'll go through. So I encourage everyone, if you have any questions, feel free to write those questions down and then come and see me at the end, or get in front of one of our finance consultants and make sure you speak to them, make sure you get all your questions answered. Now, before we go on, just a little bit myself as well. Very quick recap of my background, the history. Basically, managed funds and also private banking. I spent years working as a financier for one of the 4 major banks, and my specialised area was setting up medical clinics and dental clinics in Victoria. So the clients that I used to look after were high net worth individuals, doctors and dentists, and I used to really look after them in terms of commercial lending, asset finance. But eventually, by default, I used to spend most of my time was spent with property investors and restructuring their property portfolios. So a lot of the stuff that I'm talking to you about today, I've done myself. I'm also a property investor myself, and I trade options. I retired trading options and using a line of credit from my property portfolio, and I basically retired. And then I got involved with the academy, and now I'm teaching others to do the same. So a lot of the stuff that I'll be talking to you about today are concepts that I've actually implemented with clients, implemented myself, and the products that I'm talking to you about today, we can actually give you. So there's nothing here that I'm mentioning on stage that we can't offer you as a client. Otherwise, I wouldn't be mentioning it. So it's not like I'm going to give you a bunch of strategies and you're going to go out there and deal with mortgage brokers and banks and they don't know what you want to achieve. So all the things that I'm talking to you about today, 21st century finance can actually offer you. So if we just go to the slides, what I'll be covering today is basically, and this is what you'll learn today, you'll learn that finance is the reason you invest in residential property, and property itself is merely a wealth creation vehicle. Now, how many people have heard me speak before? Yeah, quite a few. How many people haven't heard me speak before? Great, so I can recycle some of my old jokes. And how many people won't put their hand up? Yeah, that was one of them. So basically we're talking about property as itself is just an asset class. And I'll be talking about debt and how to structure large property portfolios and the different distinctions that you need to appreciate as an investor will get you from A to B. Also, I'll be talking to you about structure and why structure is far more important than the interest rate. And what I mean by structure is really loan-to-value ratio, which is LVR, and I'll define these in a second. Line of credit and terms and conditions. Now, there's a lot of jargon in this industry, and I'm not sure why there's so much jargon in the mortgage and finance industry. And I just want to clarify a couple of fundamental terms, which I'll be referring to for the next hour or so. So first one is a loan-to-value ratio, which is LVR. Now, very simply, if you've got a property worth $500,000, okay, so this is just a typical property with $500,000, and you have a mortgage of, let's say, $400,000, that's an 80% loan-to-value ratio. So, in other words, 400,000 is 80% of 500,000. Fairly straightforward. Everyone comfortable with that? Yeah? Okay. Now, a line of credit is like a giant credit card against the equity of your property. So, generally speaking, the banks are happy to give you or lend you up to 80% against the value of your property. So, let's say in this example, your mortgage was in fact $300,000 rather than $400,000. What is the gap between $300,000, which is your mortgage, and $400,000? Anyone? 100,000, right? So you can get a line of credit for $100,000. Now, a line of credit is basically getting equity out of, or cash out of your equity in your property. And this is a tool that's used by investors to either use that money to buy more investment properties or trade options, trade shares, or implement any of the strategies that we teach at the Academy. So this is a very important tool that investors use to leverage their time and their money. Now, we spend a lot of time just unlocking our clients' equity to enable them to buy more property or to implement any of the strategies that we teach. A line of credit is basically a tool that I guess you can borrow above 80%, but you've got to pay lender's mortgage insurance as well. Terms and conditions, I'll go through those in detail as we proceed as well. You also learn how to pay off your current 30-year principal and interest mortgage in less than 15 years. Who thinks that's a good strategy? Yeah? I want to show you how to do that without even budgeting, just by restructuring what you're doing currently. I'm also going to show you how to turn a negatively geared property into cash flow positive or neutral within 30 or 60 days in the current market. Who thinks that's a good strategy to learn? Yeah? Now, when I'm talking about a property in the current market, this is what I'm working with. I'm working with the following numbers here. You're looking at a rental yield of about 4.5%, which is your typical rental yield around major capital cities in Australia. I'm talking about the cost of funding of, let's say, about 8.5%. Used to be 9.5, but just dropped. So you've got a shortfall there of about 4%. So I'm going to show you how to turn a property like that in the current market into cash flow positive or neutral within 30 to 60 days. And these are products that we have currently available, and I'll talk to you about those specific products as well. And I'm going to show you how to sack your boss and take 1 year off to pursue your business endeavours as well. Who'd like to sack their boss? Yeah? Sounds good? Now, let's talk about 21st century finance and who we are. 21st century finance is not your typical mortgage broker. Now, we've basically, all of the guys that work for us, I've personally trained and recruited, and I've really picked the best of the best. Now, the other thing is that we all go to the same, we go through all the education the Academy actually teaches. So we've been to the 4-day. Every single person that works for us has the home study themselves, and they've watched most of it, are encouraged to watch majority of it. So the advantage of dealing with us is really that we know exactly what strategies you want to implement. Because if you go out there in the real world and you go to a mortgage broker or a financier and you ask them, listen, I want to unlock equity to rent some shares or sell insurance, they won't know what you're talking about. Who would agree with that? Yeah? So what we basically, and this is the reason why we've got the service, with 21st Century Finance, we've been specifically designed and structured to help you guys implement all the strategies that the Academy teaches. Because we just found it really too hard out there to find a mortgage broker or someone in a bank, a lender or a financier that knew exactly what strategies you want to implement. And if they don't know what the strategy is, then they can't really help you to get from A to B. Who would agree with that? Yeah? So basically, what we do is we specialise in unlocking equity, which is probably that's the most common activity that we do, is we're structuring existing loans and unlocking equity, establishing a line of credit. We also specialise in restructuring finance, meaning setting up specific structures that will enable you to trade shares or do an internet business or a number of different things which I'll cover throughout the presentation. Access better rates. We have access to wholesale funding as well, so we can actually get you cheaper rates and save you some money as well. We also specialise in creative finance. And creative finance is really one of the key things that we can add value to as an investor, because a lot of investors out there, after the third, fourth, fifth property, depending on their income, hit a wall where they're what we call maxed out in a typical lending scenario. And what we do is we can go to the next level and we can show you strategies that will enable you to keep buying properties, even though you don't have cash flow advantage anymore in terms of negative gearing benefits and so forth. So we can get through and help a lot of our clients buy properties where they've been to banks and other financiers and mortgage brokers and they've said, no, you're maxed out, we're not going to give you any more money. We can go and get that extra property and that extra deal. In terms of the lenders, we pretty much have everyone. Okay, so we have access to every lender pretty much in Australia. There's a lot of these lenders that are no longer around, and if you look at the list of lenders that we can access, people like Macquarie, for example, have pulled out of the mortgage market. Bluestone Mortgages, there's a number of lenders that have actually pulled out, and it's an interesting thing because I constantly get asked this question, Conrad, what's the highest loan-to-value ratio that I can get in the current environment? Because in the past, there were situations where you could have borrowed 106% loan-to-value ratio. Okay, who's had a loan of 106% here? Yeah, it covers your purchase of your property and your stamp duty and closing costs. So those loans are no longer available. At the moment, the highest loan-to-value ratio is pretty much 100% loan-to-value ratio, plus lender's mortgage insurance. I'll cover lender's mortgage insurance as we go as well. So that's pretty much the maximum loan-to-value ratio. Now, the interesting thing is that the lending environment, there's been a lot of stuff in the media lately with regards to the subprime fallout. Who's heard that stuff on the media? Yeah? There's been a lot of coverage around the world. Different markets are affected. Banks are falling over in the US. The stock market's been affected to a large extent. And really the subprime has an effect to some extent into Australian lending environment as well. The thing with Australia is that our exposure to non-conforming lending or the subprime lending has been much lower than the one in the US. So we've basically had a fraction of exposure compared to what they've gone through. But really, just to give you a bit of background, with lending in Australia, lenders source their funding from two sources in Australia. The first source is what we call balance sheet lending, and the second source is securitized funding. Now, balance sheet lending is when a bank, like it could be one of the four major banks, or ING, St George, when they have savings accounts or term deposit accounts, and the Australian public parks their money in that company or bank, and then they lend it out to the general public. So ING has a savings account, for example, and they offer you a rate of return. They take your money and they lend it out at a higher rate of return. And the difference, this is a very simplified version of how they operate, but the gap is their profit. So that's basically balance sheet lending. Now, securitized funding is when people like Macquarie, who don't have those saving facilities, go out to the overseas money markets and they buy funding wholesale from pension funds and fund managers in the US. And those lenders have been affected dramatically by the recent subprime fallout. And they're the ones that have been pulling out of the market. So why is this important to you to understand as an investor or as a potential investor is because people like St George, ING haven't been really affected to the same extent as other lenders like Macquarie and some of the non-conforming lenders in Australia. So what I'm going to do now is I'm going to play you a quick 6-minute clip, which is an interview with one of the top leading private bankers in the world talking about the subprime fallout. Now, I must warn some of you, the clip does contain British humour, so some of you will be offended by the contents of this clip.